Hey everyone, welcome back to FluxFolio Finance Channel, your go-to spot for breaking down the biggest financial moves shaping your future. In our last video, we uncovered the Mar-a-Lago Accord, a bold U.S. strategy to dominate global economics by scaring other nations into buying U.S. treasuries, slashing interest rates, and printing dollars to snap up the world's assets. Today, we're diving into how this ties directly to the crypto market, specifically Bitcoin's recent uptrend, its potential to hit $150,000 or even $1 million, and what this means for Ethereum, stablecoins, and other tokens like Solana and XRP. We'll also explore how stablecoins are fueling U.S. Treasury demand, what Bitcoin and Ethereum ETFs really mean, and whether Bitcoin is becoming a true monetary asset. Let's jump right in and keep the momentum going. Hit that like button, subscribe, and let's get started. Let's kick things off with Bitcoin's recent surge because the numbers are absolutely wild. As of April 2025, Bitcoin is trading at $88,553 after peaking at $109,079 in January. That's a 34% jump over the past year, driven by massive institutional inflows, the 2024 Bitcoin halving, and a crypto-friendly U.S. administration under President Trump. Analysts are now predicting Bitcoin could hit $150,000 by the end of 2025, with some bold voices like Cathie Wood of ARK Invest forecasting $1 million by 2030. But what's really driving this explosive growth, and how does it connect to the Mar-a-Lago Accord we talked about last time? For those who missed it, the Mar-a-Lago Accord is a U.S. government strategy to flex its economic power on the global stage. The idea is to create uncertainty, whether through trade wars, geopolitical tensions, or even a manufactured crisis, to scare other countries into buying U.S. treasuries as a safe haven. This lets the U.S. cut interest rates, print more dollars to pay off maturing treasuries, and then use that freshly printed cash to buy up global assets at rock-bottom prices during a crisis. It's a new economic cycle designed to reset the board in America's favor, and we're already seeing it play out. Since February 2025, the U.S. Treasury has injected $510 billion into markets by drawing down its general account, flooding the system with liquidity that's boosting risk assets like Bitcoin and other cryptocurrencies. Now, let's zoom into how this ties to crypto, starting with Bitcoin and Ethereum ETFs because they're a massive driver of this rally. Since their approval in January 2024, U.S. spot Bitcoin ETFs have seen $60 billion in inflows in 2025 alone, with projections of another $70 billion by year-end. Ethereum ETFs are also raking in huge sums, $28.5 billion expected this year. These ETFs mean institutions like BlackRock, Fidelity, and Grayscale are buying up Bitcoin and Ethereum to back their funds, directly driving demand and pushing prices higher. Just look at MicroStrategy, they now own 450,000 Bitcoin worth over $45 billion, making them one of the largest corporate holders. But what do these ETFs really mean? They're a signal that crypto is going mainstream, with Wall Street treating Bitcoin and Ethereum as legitimate assets, not just speculative plays. This institutional adoption is a huge reason why Bitcoin could hit $150,000 soon, and it's a direct result of the US government's warming relationship with crypto. More on that in a bit. Next, let's talk about stablecoins because they're playing a sneaky but massive role in this economic cycle. Stablecoins are cryptocurrencies pegged to assets like the US dollar to keep their value stable, and they're used for payments, remittances, and trading in crypto markets. The two biggest players are Tether, which issues USDT, and Circle, which issues USDC. Here's the wild part: Tether, with a $140 billion market cap, has invested $106 billion into U.S. treasuries to back its USDT token, making it one of the largest holders of U.S. debt in the world. Circle is also a big buyer of treasuries to back USDC. This means stablecoins are directly supporting the Mar-a-Lago Accord's goal of flooding treasury markets with buyers, which lets the U.S. print more money and fuel this cycle. Posts on X highlight how Tether's 400 million users are bridging crypto to U.S. treasuries, creating a macro liquidity surge that's lifting all boats in the crypto space. So, how does this all push Bitcoin to $150,000 or even $1 million? Let's break it down with the macroeconomics at play. First, the Federal Reserve's recent rate cuts and a weakening US dollar are making Bitcoin a go-to hedge against inflation. Bitcoin's fixed supply of 21 million coins means it gets scarcer as demand grows, especially after the 2024 halving cut mining rewards in half. Analysts like those at Galaxy are predicting Bitcoin could hit $185,000 by the end of 2025, while Robert Kiyosaki sees it reaching $1 million by 2035 if the U.S. economy crashes, driving investors to decentralized assets. The U.S. government's relationship with crypto is also a big factor. Under Trump, we've seen crypto-friendly policies like stablecoin legislation and even talks of a Bitcoin strategic reserve. Trump himself has called Bitcoin a great American asset, and his administration's push for deregulation is encouraging more institutional adoption. But it's not just Bitcoin, other tokens are set to benefit too. Ethereum, with its $3,200 price tag as of January 2025, is riding the wave of ETF inflows and its role as the backbone of DeFi and smart contracts. Ethereum's upcoming upgrades, like better scaling solutions, could push its price to $5,000 by year-end, especially as DeFi projects like Aave and Uniswap see more adoption. Then there's Solana, which is up 45% in year 2024 to $210, thanks to its high-speed blockchain and growing NFT and gaming ecosystems. XRP, trading at $2.40, is also gaining traction after Ripple's legal wins against the SEC, making it a favorite for cross-border payments. These tokens are likely to see massive inflows as the US pumps money into tech, AI, and crypto industries, aligning with the Mar-a-Lago Accord's goal of investing in strategic sectors. Now, let's talk about the US government's broader plan because this ties everything together. The Mar-a-Lago Accord isn't just about buying assets, it's about creating a crisis where prices crash, letting the US swoop in and dominate. If the US economy takes a hit, it'll drag global markets down, but the US plans to export that inflation to other countries and industries, just like it did to Japan in the 1980s and China in the 2000s. This time, the focus is on tech, AI, and crypto, industries the US wants to lead. That's why we're seeing so much money flow into Bitcoin, Ethereum, and other tokens. As the US prints more dollars, investors are flocking to crypto as a hedge, and stablecoins are amplifying this trend by channeling funds back into US treasuries. Here's where it gets really interesting: some US allies might actually get rich in this cycle. Countries like Japan, South Korea, and the UK, which are heavily invested in US treasuries, could benefit if the US orchestrates a soft landing. Meanwhile, industries like technology, AI, and crypto are set to explode. That's why I'm linking Bitcoin, Ethereum, Solana, and XRP in the description. They're the tokens likely to see the biggest pumps as this money flows in. Bitcoin's recent uptrend to $109,079 in January 2025 is just the start, and with the Fed potentially cutting rates further, we could see a full-on crypto bull run by mid-2025. So, is Bitcoin becoming a true monetary asset? That's the million-dollar question, literally. Bitcoin's often called digital gold because of its scarcity and store of value properties, but it's still volatile, down 19% from its January peak as of April 2025. However, with ETF inflows, institutional adoption, and a potential US Bitcoin reserve, it's closer than ever to being a legitimate monetary asset. Ethereum, on the other hand, is more of a tech play. Its value comes from utility in DeFi and smart contracts, not just as a store of value. Both assets are benefiting from the macro trends we're seeing, but Bitcoin's fixed supply and narrative as an inflation hedge give it a stronger case as a monetary asset in the long run. Let's wrap this up with what this all means for you as an investor. The Mar-a-Lago Accord and the US's Treasury play are setting the stage for a new economic cycle where crypto could be a major winner. Bitcoin at $150,000 by the end of 2025 is within reach, and $1 million by 2030 isn't as crazy as it sounds if these trends continue. Ethereum, Solana, and XRP are also poised for big gains as money flows into these sectors. But there are risks. If the US overplays its hand, we could see a global crisis that shakes confidence in all assets, including crypto. What do you think? Will Bitcoin hit $1 million, or are we in for a crash? Drop your thoughts in the comments below, and if you found this breakdown helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss our next video on FluxFolio Finance Channel. We'll be diving deeper into the global fallout of this economic cycle, so stay tuned. Thanks for watching, and I'll see you in the next one.